This is John Kvale, and this is your December, yep, that's right, your December Capital Market Financial Planning Review, the last one of the year. And it's a beautiful day on a Sunday early afternoon, hence the casualness and sitting outside. I'm going to move myself up, whoops, the other direction. Here we go. This one will probably be a shorter post. First of all, wanted to review the new levels for our contributions to retirement plans. Most popular are the 401k and the Roth and the IRA. Those did not change. 401k has $19,500 moving into 2021 with a $6,500 catch-up provision for those 50 years and older, moving it up to a smooth $26,000. And then the Roth and the IRA have $6,000 with a $1,000 contribution. You can see here on those of you that are listening in listen-only mode. Oh, by the way, those of you that are driving, keep your hands on the wheel. I almost forgot to say that. That's my token regular statement. Those of you that are in listen-only mode, I've highlighted the base amount. There are some other more obscure amounts that did change slightly, but we rarely run into those. The bulk, 98% are 401ks, Roth, and IRA, and those did not change. All right. One thing that we found something very interesting this year, and we talked about it. Those of you that are listening is something odd happened, and that was that money really started moving slow in December. And we're going to take note of this and probably likely make changes to what we do just so that we don't get caught in it. Everything happened. We got everything done, but we did have a few problem things that were delayed, but just of note. And I don't know what the reason was. That maybe it's remote. Hopefully we won't be in this situation next year, but just wanted to reiterate that. All right, down onto a frightening but data mined post that I did early to mid-December. And basically this was the index that blew up in the bubblicious 1999 years, and it took about 17 years. Those of you that are in listening only mode, I'm looking at a graph where it took about 17 years for it to break even. It is not meant to scare, just meant to remind folks that price is what you pay, value is what you get. We continue to be frothy in the markets, and it's just need to be careful at where we are on the capital markets moving forward. So it doesn't mean things are going to. This is an exaggerated example, so don't take it as the sky's falling. All right, I did something a little bit different. This was such a unique year. I'm going down to the very last statement, and I was about to do this video, and I wanted to add this in case folks are listening and you missed this. I did a post, and I collected thoughts, musings throughout the year, and I put them all in a bullet point, and it turned out to be almost 30. There are some funny, silly ones in there, but there are also some serious ones. So if you didn't have a chance to see that post, those of you that are watching, here's a hot link. Those of you that are listening, I've got a hot link too. It was one of the last posts of the year, and it became the last post of the year because some new CARES Act 2 information took up a bit of my post midweek of the last week. I had planned on doing it a softer end of the year post, but take a look at it if you get a chance. I think it will be worth your while. And I purposefully not mentioned any of the CARES Act stuff because we're going to go into that in great detail here in the very near future. So, and there's a lot to go over there. Anyway, that's it for your December. The 2020 is done. It's behind us. I know it's been a most interesting year. Hello, 2021. Those of you that are in listen-only mode, I've gone all the way back up to the top. I'll post this video, and I hope you have a wonderful new year, and we get going, and everybody enjoys the time that they've had with those special, and we as always value every moment that we have of your attention. So thank you very much. Have a great day. Happy New Year, and we'll continue to do this next year.